So with interest rates pretty low right now on many credit products, you may be wondering if now is a good time to take out a personal loan. Now, I can't answer that question for your specific situation, but there are definitely some things that you should consider before taking out a personal loan. So in this video, I want to go over the pros and cons of getting a personal loan. But right here off the bat, I want to define what I'm talking about when I'm talking about a personal loan. First, I'm not talking about a payday loan or a cash advance. I don't even consider or refer to those as personal loans. Those are scams and ripoffs. When I'm talking about a personal loan, I'm talking about you applying for a loan at a reputable lender, financial institution, getting the money deposited into your bank account, and then making fixed monthly, typically monthly, could be some other interval, monthly payments of principal and interest throughout the term of the loan, with that interest rate being in the single digits or low double digits. That's what I'm referring to as a personal loan throughout this video, not cash advance loans and not payday loans. Also, if you're thinking about getting a personal loan, you might want to check out Fiona. Link in the description below. It's no cost. It's free. It does not affect your credit score. Fiona basically compares interest rates and terms of personal loan lenders depending on your situation. These are not loan sharks. They're reputable lenders. Check out the link to Fiona in the description below if after watching this video you think getting a personal loan is right for you, because there are definitely pros and there are definitely cons as well. Getting a personal loan is not necessarily the right move for everybody. But for right now, let's dig into the pros and cons of personal loans, starting with the pros. Pro number one, getting a personal loan can actually increase your credit score in 3 ways. It can hurt your credit score in 3 ways as well, as I will talk about in the cons section of this video. But for now, let's focus on the 3 ways that getting a personal loan can actually increase your credit score. Number one, if you responsibly make timely payments on your personal loan, that will positively impact your payment history factor of your credit score, which is responsible for 35% of your credit score. Way number two, getting a personal loan can increase your credit score is that it can reduce your credit utilization if you use your personal loan proceeds to pay down higher interest credit card debt. Credit card utilization is important. It makes about 30% of your credit score. So if you have a credit card right now, and this is your only credit card, and it has a credit limit of $5,000, and your balance on that card is $4,000, ouch. That's 80% utilization. That's way too high. But if you're approved for a personal loan for $3,000 and use that money to pay $3,000 down on your credit card balance, not only will you save on interest that's accruing on your credit card, but boom, your utilization goes down to only 20%. Third way that getting a personal loan can increase your credit score is helping your credit mix factor, which contributes to about 10% of your credit score. So how the credit mix factor works is lenders generally like to see that you've been responsible with a variety, with different forms of credit. So if right now the only credit that's been extended to you is revolving credit, like credit cards, then getting an installment loan like a personal loan could actually increase your credit mix and help your credit score out a little bit. Pro number two of getting a personal loan. A personal loan can help you save money if you use it to pay off high interest debt. I alluded to this previously with credit cards, but it's common sense. If you take out a personal loan at, say, 10% to pay off a credit card at 20% interest, that saves you money, and that's obviously a good thing. Pro number three, a personal loan can keep you from going into higher interest debt. Look, if you've taken my personal finance course, the money course, link in the description below, you know that I teach that when you're just starting out, an emergency fund is invaluable. But let's say you aren't at that point yet. You don't have an emergency fund yet, or you have some catastrophic event happen that completely exhausts your emergency fund. What can you do? Well, you could put that money on a credit card at a super high interest rate, dig yourself a hole, might be tough to get out of, or you can get a personal loan, which will generally have a lower interest rate. Pro number four, a personal loan can make you money if you borrow at a lower interest rate than the rate of return of whatever you're investing in. It's not a perfect analogy, but it's kind of like a mortgage on a rental property, right? You borrowed money, you're paying interest to the lender, right? But you're also making rental income. It can be the same thing with a personal loan. I have borrowed money personally to invest in opportunities that came my way. I'm not necessarily recommending that. There's always risk when it comes to investing, but that risk is amplified even more when you borrow money to invest. So I'm not recommending that you do this, take in a personal loan to invest, but it is a possible pro of personal loans. They can make you money, but of course they can also lose your money. Con number one, just like getting a personal loan can increase your credit score in 3 different ways, getting a personal loan can potentially hurt your credit score as well in 3 different ways. Way number one that a personal loan can hurt your credit score is that your lender will very likely pull your credit when you apply. A hard inquiry like that can take a few points off your credit score temporarily. Way number 2, a personal loan can adversely affect your credit is that your length of credit history will go down. Your length of credit history accounts for about 15% of your credit score. Obviously, a brand spanking new personal loan will reduce your credit history average. For example, if right now the only thing on your credit report is a credit card you've had for 10 years, your average length of credit history is 10 years. Add a brand new personal loan, your average goes down to 5 years. And finally, way number 3 that a personal loan can hurt your credit is if you miss payments on your personal loan. Payment history accounts for a whopping 35% of your credit score. So if you miss payments on your personal loan, your credit score will go down. Con number 2 of personal loans, a personal loan can cause you to spend irresponsibly. It's just part of human nature. When your bank account balance has hardly anything in it, you tend to be a little bit more careful about how you spend. That's why I personally keep very little cash in my checking account. Money comes into my checking account, it's immediately invested, so I don't see it, so I don't see this big old balance in my checking account that could cause me to spend money on things I don't need. Same thing with a personal loan. You get a personal loan for a few $1,000s, it's sitting in your account. You could be tempted to spend it in ways you wouldn't if you didn't have as big a balance in your bank account. Con number 3, and this one's pretty obvious, but you will have to pay interest on your personal loan. That is real money out of your pocket that you're paying to rent the lender's money. This is fairly obvious. I'm not going to spend any more time on this. Con number 4, fees. Some personal loan products will charge you a fee even beyond the interest you pay on the loan. This could be a non-refundable application fee. It could be an origination fee on the front end. It could be a prepayment penalty if you want to pay off your loan early. Obviously, late payment fees are a thing. So before you even apply for a particular personal loan product, you want to make sure that you've asked the lender about all the possible fees they would charge you, starting with the application fee, if any. So, should you get a personal loan? Well, you basically have to weigh the pros and the cons that I've talked about in this video and decide, look, is the interest I'm paying on this personal loan worth it? If you're going to use this personal loan to pay off higher interest credit card debt, sure, very well could be worth it, as long as you make timely payments on that personal loan so you don't wreck your credit score. On the other hand, if you're getting a personal loan just to spend it on a vacation or a trip or decorating your home or something like that, I would probably recommend against that. When it comes to consumption, I'm a big fan of delayed gratification. That trip or that decor or that furniture you buy or whatever it is will feel so much more satisfying when you worked hard for it and paid for it with your own money rather than borrowed funds. And that's a smarter financial decision as well, because when you take into account interest, that purchase will be cheaper if you just pay for it with your own money rather than borrowed money. Of course, if you do think a personal loan is right for you, make sure you understand all the terms and conditions, and especially because of the fees, right? Because I've seen a lot of bait and switch in the personal loan space where the lender advertises a very low interest rate, but then hits you up on the wazoo with fees, kind of like what Spirit Airlines does with plane tickets. All right, folks, those are the pros and cons of personal loans. Did I miss any? Let me know in the comments below. Also, I have 2 videos for you on the next screen. The first one is how I personally dug myself out of $50,000 of debt that I had accumulated at the age of 21. The other one is one of my OG videos on this channel on 8 ways to get out of a bad payday loan. Be sure to check those out, and I will see you over in those videos. Bye-bye.